The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon. It is a wonderful Friday, September the 14th, here at TFNN.com, the headquarters for technical trading and investing. We're all kind of a little bit shell-shocked over the huge FOMC meeting yesterday. Normally, they're fairly inconsequential, and a day later, pretty much everything has gone back to normal. They really have the ability only to affect the market on the edges. They went and did something a little bit different this time, and that was they did the full Monty. Yes, they ran naked down the street and yelled all in. Old Bernanke was throwing money out the window of his car on the way here. Everybody's probably seen that video now. Driving down the streets, throwing wads of cash out the door. Basically betting, I believe, and I wanted to think about this for a day. I don't think it's any hyperbole to say he's betting the future of the entire world's economic future on being able to outspend the economy. I don't think it's going to work. Normally, I don't think a lot about actual projections for S&P 800 and 825 and 850. I hadn't seen a reason for it yet. I see a reason now. If you wanted to be scared, this is one reason. The reason is that everybody says the most scary words are "it's different this time," and that somehow the laws of finance have been repealed. Supposedly, if you start spending $40 billion or $50 billion a month buying bonds, that money has to come from somewhere. And if it doesn't come from somewhere, then it's coming from nowhere. If it's coming from nowhere, it's no different than taking a nice little 2-gallon bucket to the deep end of the pool, getting 2 gallons and taking it down to the shallow end and dump it in. And that's basically all you're doing. You're just kind of making look like something's happening. Certainly going to make it a lot easier for people with houses and bankers to move those houses with supposedly lower interest rates. That may not be coming through today as we see some strength and maybe a little bit of opposite reaction to what our Grand Chairman, the squeezably soft Charmin Bernanke, thinks we should be doing. But he has certainly yelled all in. There was probably I've seen two of the best, I would say, either interviews and speeches today that I've seen in probably months, if not years. The first one was Kevin Warsh was on CNBC this morning, and he made more sense than anybody I've ever heard. I now can see why he was the youngest member ever of the FOMC meeting or committee, and he basically quit in 2011. I think he didn't see eye to eye with our illustrious Ben Bernanke, but the best quote that he had out there this morning was, "We've been running stimulus programs like an infomercial. If you act now, but before you act, we'll actually send in 2 of these." Well, I guess my favorite infomercial right now is the guy that shoots the rubber in the downspouts off the roof of the house. It's just like liquid rubber in a can, he says. Anyway, he had some good stuff. I think it's on the CNBC website. But a very clear idea that basically I was trying to form my thoughts, and he did it so much more brilliantly and eloquently that I'll refer to him. But it basically was my same thought, which is we're going to spend a lot of money on this. It's probably not going to amount to a hill of beans when it's all over, but it will keep inflation, at least on asset prices, running very high, which is probably not the thing a lot of people want to do if they want to buy a house. We'll have a lot of people graduating in the future, and the idea that we can mortgage those people's futures by trying to drive up artificially prices today smacks of that wonderful cartoon character saying, "I'll gladly pay you Tuesday for a hamburger today." But I don't know. Excellent thing. Another one of his quotes, the iPhone 5 will do more for the GDP than QE3. But pretty smart guy, you can see it. I don't think he really gives he's part of a fellowship now and goes to work every day, but he ended up marrying a gal with some deep pockets. I'm trying to remember what it was. The heir to the Estee Lauder what is it, beauty? I guess you'd call it a beauty company, cosmetics company, and I think she had a couple $100 million or so. So he's not going to sweat out losing his job at the FOMC. Pretty much bucked heads all the way through the 2007 to 2011 period, and decided he had enough of it and was going to go over and be able to spout his own opinions. But probably one of the smartest guys I've seen in a long time. And of course, brevity is the soul of wit, and he got to it with a few one-liners that really made you think that he knew exactly what was going on. In fact, one of the, without acting smart, really understood, gave me the impression he knew exactly what was going on, and had some fairly decent good opinions on it. But I like that. The iPhone 5 will do more for the GDP than QE3. Let's see what else we have. UNH is replacing Kraft, KFT, in the Dow 30. Kraft Food shares fell early this morning. Consumer food company will be removed from the Dow Jones Industrial Average and replaced with the United Health Group. Most of this, my understanding for the reason is that the way that Kraft had levered a lot of their earnings, there was very little chance that the stock was going much higher or much lower, and they wanted to get something that actually moved. The other reason that they said that they were moving Kraft out, that it didn't represent the U.S. market anymore as an industrial, because more than half of their sales are now outside the United States. HD, our wonderful Home Depot, is leaving China. It had about 870 employees left, 850. In China, as the retailer changed its focus in the Chinese market to online and specialty stores, becoming the latest retailer to fill the chill from China's very quickly slowing economy. The New York Stock Exchange was $5 million today, and why? Because they were giving somebody data before the rest of the people. This falls under the old classic honest mistake. Of course, they couldn't prove it, so they fined him $5 million anyway. My guess is if it was truly an honest mistake, why would you fine somebody $5 million? So I'm thinking it is the not so honest mistake. The Securities and Exchange Commission said it marked the first time the agency ever imposed a fine on an exchange. So kind of land breaking, I think, a shot across the bow that the New York Stock Exchange, you'll probably find out somewhere down the line. These things do not happen. Everybody would probably know about it almost instantly, but we talked about on this show many times and had a guest about how they actually put a whole data center outside the New York Stock Exchange just so they could absolutely make sure everybody was getting data to their trading computers in that giant trading facility in New Jersey at the exact same time, and had spent huge amounts of money to make sure that it happened. That a few people got it 100 milliseconds at a time was enough for them to clean up for almost about 20 days. And if you know the kind of money that you can actually make in high-frequency trading, I suspect that $5 million was a drop in the bucket. But and kind of what's going on. We're going to get to charts here fairly soon, because we've got so much going on. We went through kind of a lightning round yesterday, although I even have to say that it makes my stomach upset to be that crass about it all. But we've got a lot of stocks moving. One of the ones that caught my eye, the biggest yesterday, was gold and silver. I was looking at the ZSL, which is the one that I thought was very exciting, in that we'd come down and tested a previous low on about almost half the volume. The previous low on the ZSL was February 29th at $40.60 with 4.2 million shares. Went through it with a fairly nice candle, and the volume did increase from the previous days, and it is still below that previous low. What we haven't had is a lot of volume, and that 2.4 million shares yesterday and the super light volume today. Let me see if I can't get one change here real quick. Let's see if we can't get some updated data. Notice that the intraday data feeds on volume have been kind of messed up, but yeah, we've got a little bit more here, but still going to be a fairly light volume day in the ProShares Ultra Short ZSL. We'll have some other ones. I guess I bring it up sometimes, but the greatest book I thought that the Sherlock Holmes episodes was the what was it? The dogs in the Hound of the Baskervilles. And that was always because he solved it by knowing that when a gentleman walked in, the dog didn't bark. So that the dog must have known him, so it had to be somebody that knew the dog previously, and it helped him solve the case. When we look at some of these stocks, the ones I'm thinking of, very interested to see whether or not they didn't bark. Now, depending on which one you want to look at, you've got two schools of thought. The December 19th low on Intel, INTC, that was $23.05, and it had fairly high volume, 94 million shares. We did go into that with about half. It is starting to pull back up. But I wouldn't say it's a very clear signal so far. But as we watch this, what is that? It's going to close back above that range again today. So it's possible you could actually see this thing and think that it was making a bottom. I actually think that they're probably going to do fairly well after the Windows 8 comes out. I think a lot of the scary stuff is out there. But still fairly interesting to see this thing at least come into a low on lighter volume. When we come back, we're going to go to Apple and see how it's moving. Tried to challenge that $700 range, pulled back. See if I can't get a updated quote on it here during the break. And no one likes their new little earbuds. They say the reviews are coming in and they do not like them. For $30, people are saying they are doo-doo.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
We get back brisk volume today, 3.4 billion shares on the consolidated New York Stock Exchange tape so far. Of course, the S&P up about 6, was up to 1474 today, so what's up 9 points, 8.5 points higher than it is right now. So we'll continue to take a look at these. I'm kind of a little suspicious. I think a lot of people are taking a little bit of money off the table here. Ran a lot of shorts, and I suspect we probably see 2 more days. Of course, expiration is a week from today. Normally you see the high of expiration around Wednesday, so we could have 2 more, 3 more days up here. We're probably going to get a retrace. That retrace is going to tell us whether or not this is going to stick or not. I've been kind of iffy, at least today. I wouldn't call it a great follow-through, but we had a nice little pop on Apple today, lighter volume. Some of the reviews are starting to come out on the phone, and I saw a few on the headsets that were supposed to be. Everybody's kind of complained about Apple's headphones before and their earbuds, but the new ones not getting much of a reception either. Still fairly weak. We're going to be talking in the second hour, I think, tonight of the Tom O'Brien Show about the Technology Insider segment. And I've got a lot of opinions and news on Apple we're going to work in to that position, but I do not like the way it's traded. The one thing you really would have to wait here and watch for is a close below the 3x3 displaced moving average. You've got everything setting up exactly as you would want it for a top, and I suspect that even though they've said that they've sold out, like I said on the show earlier, I think last week, we already knew that they were going to sell out because Sharp, who makes the display panels, was going to be about 2 million short. They basically split the display manufacturer between Sharp and, what's the other one? Samsung. And Sharp was having a huge problem getting volume up to get the 5 million that they were supposed to have for a total of 10 million. We knew that they were going to be about, from reports, at least 2 million short. Not a big surprise that they've already sold out. But of course, a lot of what Apple does is all about perception. They are not beyond the scope of pulling a giant stretcher and just telling people that they've sold out, even if they haven't. It's all about perception. I've told the story. I'll tell it again here today. I've gone to several Apple events, a lot of them at Moscone Center there in San Francisco. They would rent 3 or 4 different halls of different sizes and find out how many people had lined up, and they'd always make sure that there were about 20% more people that could get in, and they'd pick the hall that they had. So no matter how many people showed up, they always had the ability to shove them in a room that couldn't hold them, to make it look like people were just dying to get in. It was all about perception, not a lot about reality. They've always been a little bit long on the bull and short on the substance. They never wanted to give a spec sheet to a customer and let them actually see what they're getting. It's all about the feel, and don't know too much about what you're buying. Never been a fan of that, of course, because I'm a techie. I want to know exactly what they're doing. It appeals to a certain branch of people that like using computers, don't want to know much about them. I suspect that just like being a race car driver, if you didn't know much about the car, you're probably not going to get the most out of it. Some people just like to go round and round and round. But anyway, interesting move on that. Some of the other companies, or other things I wanted to watch was the USO. We were looking at that. Kind of interesting. Got right up to $100 today. Let's see what we've got back up here. Quickly. Okay, $98.97, 99 cents now. So we are looking at about $1. It did get up to $100 briefly this morning on the news, and I think everybody's a little afraid that if they get it up there past $100, that they will try to unleash the Strategic Petroleum Reserve. I suspect that right now the president is probably getting a huge warning that you better not do it again. Those petroleum reserves are in salt caves. It depends on how many times you fill them and pull them out. But the scientific community believes that you can do that about 4 or 5 times before the walls cave in and it won't accept any more oil, in which case what are you going to do with all that oil the next time you need to fill that reserve? You're probably going to get a stern talking to if he tries to release that. That may be more jawboning the market than anything else. But I think everybody's a little worried to get back up here. We're going to look at the USO when we come back. You can always give me a call at 877-927-6648. That's 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to go right to a caller. It's Stan in Atlanta, Georgia. How are you doing today, Stan?
I'm doing great. Thanks for taking my call. My question is, the U.S. military is the largest user of crude. I heard you talking about releasing the strategic reserves, but with this physical cliff coming at them, first thing they're going to do is park all their ships and planes and other vehicles, which will increase the reserves here in the States, which is probably the best thing we could do for the economy. So I'd sort of hate to be long crude right about now. What do you think?
I think that with all the upheaval in the Mideast, that we've got Japan and China ready to go toe-to-toe over islands, and China and Russia ready to go toe-to-toe on the Spratly Islands. I mean, we've got a lot of things going. I don't think anybody's going to be leaving the Fifth Fleet in mothballs in the bay. I don't think that's a likely candidate. I suspect that there's a lot of other things that would happen first. Two, they also don't use a lot of gasoline. They use jet fuel for a lot of the stuff that they use in those ships, and also distillate. But it's not so much gasoline they use. So I think that's what everybody's worried about. I think that there's adequate supply of crude right now. The big hit would be a lot of the gasoline that got shut down over the hurricane season. But last I looked at the numbers, I think it was on Wednesday, crude supply looked, for at least the diesel supply and the distillate supply, looked fairly good in the United States. I'm suspecting the first thing that would happen would be a gasoline shortage, mostly because of the shut down refineries.
Yeah, I just don't understand crude going over $100 a barrel when the economy is like it is. I mean, Bernanke pretty much capitulated yesterday and admitted that the economy is really, really bad. So
I would, I don't know if you heard the first part of my semi-monologue. I don't know what I actually call it, but that money has to come from somewhere. And gold ran because everybody suspects that what will happen, the unintended consequence of what he's going to do is rabid inflation.
Oh yeah, well, all fiat currencies are, they're in a race to see who can be the worst to help the balance of trade. So
right, but I mean, I think that's why it went there. I don't think it had a lot to do. I think probably a quarter of it had to do with Mideast tensions, and 3/4 it had to do with Bernanke basically throwing money out the window, and just the thought that it's going to cause rapid inflation. I think the biggest reason that they're thinking inflation is that every other thing that he's done, he's at least put some kind of limit on it, or we're going to spend this amount of money. Basically, he's turned on the fire hoses and said, we're going to let it run until the fire goes out, whenever that is.
Well, the EU's doing the same thing, too, though, so I guess we're in a race.
Yeah, but you got to figure that the EU is for the way it is today, is only going to exist maybe for the next year. You got to kick a handful of the people out, but it's hard to say. But I suspect that most of it had to do with the interest rates falling and everybody just assuming that it was going to be a huge day for inflation. I mean, basically, kind of interesting that we had a huge move in gold without any follow-up today. So I'm looking at
what Bernanke did yesterday really hurt the economy more than it helped it. I mean, you can see what the price of crude did. If it goes up from here, it's any good he did will be offset by the increase in price of gas.
The conspiracy theorists would say that he called Barack Obama called him and said, gave him one of those things. Your signature is going to be on this paper or your blood. I'm not giving you a choice. I'm giving you an offer you can't refuse, kind of thing. I don't think it's that way. I think that he basically spent his life and his reputation making this work, and if he's in for a penny, he's in for a pound. And I think that he's just decided that whatever it is, he's going full tilt on it. The law of unintended consequences, when you've tried these things before, have always blown up in your face. Saw several people talking in the den about backfire bin. That may be his. It's just. I guess it's a lot of chaos theory in it, where small differences make huge changes, and a lot of them you can't anticipate. And that would be my worst fear. Is we haven't really tried this before. We've at the level he's tried it. He's tried it before, and it really hadn't worked. And the gentleman I talked about that was on the FOMC board that was on CNBC, I think you'd probably enjoy his discussion of what he thinks is going to happen, which he thinks that we're probably going to get, for the money we spend, we're probably going to get probably a tenth of it is actually going to actually make any difference. So it's, I frankly don't understand it on many levels. One, he's doing it during an election season which means he's gone as the next FOMC guy. There's absolutely no way in the world that if Obama doesn't win, that he's reappointed.
Oh, I understand that. That's a given, yes.
So, to me, he's kind of made his bed. He's done it politically. He's done a lot of things. He probably could have done some other things, but to me, it shows that he's scared that the whole thing's going to fold. And I think, like all people in finance, instead of especially people in the stock market, they're big about holding a stock all the way back down. And I just can't. I think he's gotten to the point now where he just is. He's going to win or lose on this deal, and he's betting the entire world economy on it. But I think that's why we saw some of this stuff, like gold yesterday, crude hitting 100 today. I think the only reason it didn't go higher is everybody's afraid that President Obama will unleash some of the crude. I'm just not sure that it's going to make any difference. Now, what would happen? What would happen if he did, and the price went up that day on crude?
Yeah, I don't think he'll unleash the crude. Like I say, I think he's going to tell the military to park what they can and not use it. And they're the biggest user of crude. I mean, they got these budget cuts coming at them. That's the easiest way to respond to them immediately. And that'll increase the amount of crude available for domestic use.
Well, I would say that what we've seen here today means that we've got certainly across the nation, within probably the next 30 days, over $4 a gallon gasoline.
I'm already paying that.
What's that?
I paid $4.40 yesterday.
In Atlanta?
Yeah.
Well, it's $3.70 down here.
Okay.
You guys must have some huge taxes.
Oh, I don't know, but I know that's what I paid.
Wow. For was it a premium or regular?
Yeah, it was premium.
Okay. I think it's about $3.90 down here for premium, $3.95 or something. But it is, it's close. But I would suspect that the guy that would hate that the most would be President Obama right now. I don't think he wants to start seeing $4.25 a gallon going into election season. But that would just be me thinking that that's been a fairly decent indicator of the mood of people. I talked to one of the politicians once, and he said the most phone calls he ever got over were when banks raised the fee on the ATMs. You know, you come and get $200 for $500 in income tax raise, no one calls. He said, but you raise your fees on ATMs and people squeal. He says a lot of those small things that people see every day and actually know that they're paying are the ones that they get most annoyed about and scream about. So
yeah, they can't feel the pain of this inflation that's coming at them fast. It's going to be even worse.
Yeah. Anyway, I was looking at the USO when you called. The one thing that I saw was this thing's almost right at a 618 retracement level from the high back in March 1st down to the low on June 28th. 2902. So we've kind of come back. There's a little gap down that happened on fairly high volume. Yep. That volume was like 20 million shares. So when I'm looking at least on the United States crude market, I suspect we're close enough that thing's probably going to want to go up and maybe Monday or Tuesday at least try that $38 level in the USO. And I think we're going to get a good idea right there whether this thing kind of rolls over like it did today, or if we see some volume really come into this thing. So far, the volume from the low has a pretty nice, you can draw a fairly nice line down from that with, a few spikes in it. But it hadn't been, a huge move into this ETF at least. And you'd think you'd probably see the fund managers getting into it if they thought it was going back up to $150 a barrel.
Yeah, I'm shorting with SCO right now, Sam Charlie Oscar. I made a lot of money bouncing it off of 97. Now I'm going to bounce it off of 100 as much as I can.
The only thing I'd say is that my thinking is that we are an options expiration. That they're probably going to try to hold it up. My guess is probably till Wednesday. Mm-hmm. A lot of times you'll see the weekly highs around there, and I think it could just go sideways on just short covering, because everybody was fairly short the market. Most of people went ahead and covered yesterday. The people that don't normally go to the 3-day margin call, and that's making me think Tuesday maybe, Wednesday, somewhere in there, we might see a little spike on the end of any margin calls. If I think a lot of people were kind of highly short some of these commodities, and that would be the end of it. I was, but I bought a put, so that I didn't have to make it even worse on myself if I was on the wrong side of the trade. But it certainly, to me, I don't know. I'm looking at your SCO right here. I mean, it's so close to coming back. I'd say you've already bought this?
Yeah, I have 3,000 on it. Yeah.
I'd almost say I would have waited. Just my opinion. You could be right on Monday. I think you're almost there. Where are you going to stop out?
Oh, probably around 36, somewhere around in there.
Yeah, I think that's going to probably be too close of a stop.
No, not stop. I'm going to sell out at around 36. It's trading right now at 35. So.
You're long though, right?
Oh yeah.
Okay.
I'm long, but it's a short ETF.
Right.
Yeah.
Yeah, I'm just thinking you could get. Yeah, I'm just thinking we're probably going to see at least a try Monday or Tuesday from the way it traded today of 101 to 100, probably 101 to 103. And then if it truly rolls over there, then maybe that's the end of it. But I would just suspect that we're probably going to get a little pump after this weekend. I noticed that I'm kind of surprised it stayed low enough, even though I saw reports of yet another embassy in flames when I was driving over here. I can't remember which one it was. But yet another one has been attacked, and that would have probably been about 1:45 Eastern time. I haven't checked the news on that lately. But I suspect we're probably going to see even more yelling and screaming by the Arabs over the weekend, and that may be enough to maybe open this thing up a little higher on Monday or Tuesday. But I'm thinking, once we get up here, the one thing that kind of interests me about the whole market is looking at Apple. And if this thing would open up lower on Monday, you'd have a fairly decent abandoned baby on it. So we may have this, what may be, in a few days, looked at as the blow-off top in the market. And I could see it happening.
The market, as I look at it, is at a 5-year high. It scares the heck out of me. I'm just afraid to be long in this market right now.
Well, you certainly don't want to be adding new positions here, which I think a lot of this was short covering, and we're going to see today how that comes in. I've been watching the volume. I would have really liked to see something like 5.5, 6 million shares, or 5.5, 6 billion shares on the NYSE consolidated tape yesterday. I mean, it's good. Volume's good. Let me see here. I'm looking at the wrong thing. Hang on a second here. There we go. I was looking at the entire NASDAQ 100. I wanted to look at the volume back here. 3.4 billion shares. So we're going to come up about 4.2 billion shares. Still a lot more than we've had. Almost twice as many shares some of the days in late August. But I was certainly, if you wanted to think this is, and I'd love for this to be a bull run and everything be great, but volume's probably right at the break-even point of going up and going down. I don't like the way Apple's been trading over the last probably 20 days. And the thing, if this thing opened up around 680 on Monday morning, I'd be very, very scared. I want to thank you for the phone call.
Thank you.
Hopefully I answered all your questions. And we'll be back shortly. We're going to look at some more stocks. And you can give me a call at 877-927-6648.
Are
you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, we've got one more caller. It's Joseph from Wilmington in Massachusetts on UNG. How are you doing today, Joseph?
I'm doing good, David White. How are you?
Fantastic. Anyway, calling about natural gas, huh?
Yeah.
So what are you doing? You already in UNG?
Yes.
You know, I went through the report yesterday on the build in natural gas. I really, it should have probably gone right to $21 if this was going to be it. It looks more like it's setting up in a consolidation pattern. I am long it. I got in around just over 18. I'm probably going to sell it at the end of the day here.
Okay. So you don't think it's going to go up?
I think it's going to go back down to about $19. I didn't think I thought this thing would probably, if it was going to take off and do the kind of run, it probably should have gone about that gap at 21 and 21.25 right away.
Yeah.
We had a couple of real good days on volume, and that we should have gotten one more that took us up to about 21 today, and we didn't. And that makes me suspect that this thing's probably going to pull back into the $19 range, and that makes me a little nervous. So I'll probably take my money and run here today. I'll see, next week. It may take into Thursday for this thing to base out, and if we get a decent report on the build next Thursday, that may be the next opportunity to get in.
Sure. Thank you. Thank you, David.
That's just mine. I don't like to, there's one of the problems with natural gas is there's almost always this arbitrage going on that's long crude and short natural gas. So you get, every time the crude goes up, you got a bunch of people short natural gas, just throwing a little bit more shares on the fire on some of these natural gas funds. And you, at some point, you're kind of at the mercy of the greater market of crude. And the crude went up today, I think had a little bit to do with more than just the supply and demand, but actual pressure that sometimes we see on natural gas. Anyway, pretty good. I wanted to look at a few other stocks before the end of the day. Open Table was one of them. This one I've been waiting to see whether or not it was going to come up and fill this gap that was down on heavy volume. I think we talked a little bit about this yesterday. Certainly came awful close today. But this is one that came down on super heavy volume and looks like it's gotten right up to that monster gap down. Open Table was another one of these that had kind of an earnings disaster and moved all the way down from $52.64 on February 6th down to the low of $33.53. One of the other ones on it, which is the biggest winner today, is another one of these huge losers. But it is trying to come back to a gap, and that's Fossil, F-O-S-L. Probably the biggest winner, I think, in the NASDAQ today. Maybe the biggest mover in the entire market, but I know it is in the NASDAQ at the moment. Fossil came down on just disappointing and monstrous volume. That was on the May 8th. This thing came down and rocketed down on almost 21 million shares. We tried to get into that on the 7th of June. And about 7 million shares. We're getting in there today with extremely light volume again. So I'm, what are we going to have? Probably the same kind of thing. But we are bucking against that. It's going to be very tough sledding for Fossil as we go forward. I think I'm going to be in the second hour of the Tom O'Brien Show tonight, so make sure and hang on. We'll be doing the Tech Insider. I want to thank all my callers and my listeners. Want to hope that you all have a wonderful and safe weekend. We will see you back here on Monday, and we're out of here for a little while until we come back later.